بسم الله الرحمن الرحيم والصلاة والسلام على رسول الكريم. السلام عليكم ورحمة الله تعالى وبركاته, and welcome to Fiqh al-Muamalat online course. And today we continue the discussions on the differences between conventional banking and Islamic banking, and we have covered a few points or few aspects such as the differences between Islamic banking, conventional banking, and the differences between the takaful and the Islamic insurance, or takaful, sorry, and the conventional insurance. And today we try to cover the differences between the capital market and the Islamic capital market, because just to remind you that overall the market could be structured into banking and what's so-called takaful and Islamic capital market, and also of course we can add the wealth management. So in the Islamic capital market, one of the features, the first one, in the conventional capital market, Sharia has no space for the investment. Meaning that if you go to a conventional capital market, you don't see Sharia aspect in it. So it's all free from Sharia requirements, meaning that they invest in the normal conventional investment asset classes such as bond, conventional stock, ETFs, REITs, and so on and so forth. So there is no space, Sharia has no space in that kind of investment. But when it comes to the Islamic capital market, Sharia is the core of the investment, of course. This is why you can't invest in non-Sharia compliance investment assets, but when it comes to the investment, it is driven by the Sharia requirements. If it is Sharia compliance, you can invest, otherwise you can't do that, unless, of course, under some special circumstances and the pressure and so on and so forth. So that's the call of the Sharia board to provide the kind of resolutions to guide the Islamic financial institution in that matter. But here we are talking about the differences. We're talking about the differences. Differences, number one, as I mentioned, Sharia has no space in the conventional investment space, whereas in Islamic capital market, Sharia is a core element in it. The other thing is that in the conventional capital market, Sharia board is not part of the structures of the corporate governance of the institutions which are meant for investment. When it comes to Islamic capital market, Sharia board is part of the structures of the investment funds, part of the investment banking. So you have an investment banking, so you have to have a Sharia board there, or Sharia advisor. If you have a Sharia funds, you have to have Sharia advisor. If you have a sukuk issuance, you have to have a Sharia advisor. So any kind of funds established in the market, sukuk issuance, or any kind of structured product, ETFs or otherwise, or institutions in the form of institution like investment Islamic banks and so on and so forth. So basically, Sharia board is part of the structure of the corporate governance in order to provide them guidance and issue Sharia resolution and distinguish what is permissible, what is not permissible, what class of asset that you can invest, what are the investment classes that they cannot invest. So that's the one of the other features. The other one is that business activities in the capital market are based on an interest base, meaning they invest in an interest-based bearing instruments, as I mentioned, like bonds, like some non-Sharia compliant stocks, like other structured product where elements of interest is there, so they don't mind to do that because there is no mandate to avoid it. But when it comes to the Islamic capital market, so they invest in real business activity, they invest in Sharia compliance activities which are free from the interest-bearing features, meaning that a product which is driven by profits and dividends which are Sharia compliance, where there is no interest in it. And here it depends, of course, on the structure of the market. Like in Malaysia here, whatever exists in the conventional Islam capital market space has basically does exist also in the space of the Islamic capital market. So, and even the stock market in Malaysia is close to 70%, which is the Sharia compliance, which give a big space to the financial institutions to go for Sharia compliance investment. So again, it's based on real business activity. It could be in a really regulated market, it could be in the private equity, it could be in a venture capital, it could be in an investment project, it could be in a what's called crowdfunding platforms. It could be in a blockchain's crowdfunding. So whatever investments under the regulated market or otherwise, bottom line is that it should be free from any interest feature. It should be Sharia compliance, which means you can generate profit or you can generate dividends, which is based on mudaraba or musharaka or wakala bil istithmar and so on and so forth. The other thing is that the conventional capital market entity may invest in Sharia compliance. It's an option, but it's not a mandate. So they can invest in a Sharia compliance asset, but they can invest in non-Sharia compliance asset like bonds as well. But when it comes to the investments for the Islamic capital market institutions or individuals, so basically it's a mandate to confine your investment into Sharia compliance investment asset, being in a stock or sukuk or a money market or a REITs or venture capital or private equity, ETFs, whatever kind of investment classes, it should be Sharia compliance. Meaning that you don't have the options to go out of the space of the Sharia compliance and invest in conventional space. That one is not allowed. As I mentioned, and there are some kind of circumstances and pressures and darura, which will be guided by the Sharia advisor. The other point is that the investment may involve a high degree in the capital market, conventional capital market, may involve a high degree of gharar, high speculation, and excessive risk. And you may go to the derivatives and some sophisticated investment with a very high degree of risk. But when it comes to the Islamic capital market investments, they are normally free from gharar, free from high speculations, and free from a very excessive gharar, because that may expose the investments and the man and the wealth to damage, and it's not allowed to destroy the wealth. It's a mandate to preserve the wealth. It is a mandate to protect the wealth. It is a mandate to look after the interests of the investors. So you have to manage the degree of speculation, the degree of what's called excessive risk, and the degree of gharar. Of course, gharar will be definitely free, but of course, when it comes to some investments, you may see the gharar there, but it is accommodated if it comes under the context of musharaka or wakala or mudaraba. And the other point is that in the context, when it comes to regulations, of course, in the context of Malaysia, the capital market is regulated by the Service Act of 2007, CMCA, and when it comes to the Islamic capital market, it is also governed by the Service Act of 2007, which is the CMCA. Other regulations, they may have a different law or regulations that govern the what's called the capital market. So this is the most important key feature that distinguish between the capital market and the Islamic capital market, in addition, of course, to the other features that we have highlighted previously. With that, thank you very much and hope to see you soon, inshallah, in the coming sessions. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.